Hello everyone and welcome to Bald Guy Money. And we start this video off with news I've been expecting for a few months here on the channel, and that is the Federal Reserve is, for the second time now, giving up on its fight against inflation. As Jerome Powell said, the current market conditions may warrant more interest rate cuts. Now, for those of you wondering what current market conditions he's talking about, I think this is finally an admission that the US economy is much weaker than we have been told it is. And Powell is finally giving in to pressure not only from President Trump, but also from his peers at different central banks around the world with whom he met this past week at the Jackson Hole Symposium, who are already aggressively cutting rates in their countries as they try to stimulate their way back to economic growth, as large economies like Japan stagnate with their export economy suffering very badly right now, and the German economy, as you can see in the data here on the screen, shrinking in a shocking 7 of the last 12 quarterly economic reports, as Germans and the German economy continue to navigate what may end up being a 4 to 5 year recession when all is said and done. So these guys want the USA to follow with lower rates because a stimulative US policy gets everyone on the same path to inflate a new global economic bubble. Now, unsurprisingly, this change in tone from Jerome Powell resulted in a significant move up for silver, gold, and the S&P 500, all of which finished up on the week as the US dollar experienced a sharp sell-off on Friday. Now, for those of you who think it's just blue skies ahead, I have a bit of a warning for you in this video on what this shift from Jerome Powell really means for the market and for investors. Once that's covered, I will tell you when I think we will see gold and silver make their next moves up, and we'll finish this video with an update on platinum, my latest outlook on its price, and some words on why I have changed my mind when it comes to platinum and how it's based on some new information and use cases, so be sure to watch to the very end for that. But just before we dive in, please remember to check out summitmetals.com if you want to buy gold and silver at a great price from a dealer you can trust, including 5 ounces of silver at spot when you use code NEWCUSTOMER at checkout. Details are in the video description below. So as I stated in the introduction, this video starts with a warning because after months of insisting that the economy was too strong and that inflation still needed to be dealt with, why is Jerome Powell now all of a sudden saying the United States may need lower interest rates, especially so soon after we got producer price inflation numbers that blew expectations out of the water and caused many people in the media to claim that a September rate cut was not going to happen? Well, apart from pressure coming from the president and other central banks to get on board with lower rates, another reason Jerome Powell may have chosen now as the time to announce a sudden policy shift is the fact that the Fed's reverse repo facility is approaching a zero balance. And for those of you who don't know what that is, the reverse repo facility is a tool the Federal Reserve uses to manage extra cash in the financial system by letting financial institutions that have extra cash lend their extra money to the Federal Reserve overnight for a small gain to prevent it from flooding the market. And a zero balance there in this reverse repo facility, and we're very close to that now, by the way, tells us that extra money keeping the system afloat could be running out, forcing the Federal Reserve to act now to offset the potential risk that has resulted in market sell-offs in the past. And let me add that a market sell-off is what I think insiders are getting ahead of right now. And I know I have covered this in the past, but this is an update showing insider buying and selling of stocks. And what this data tells us is that insiders are heavily favoring the sell side right now. And yes, this has been the trend for basically the entirety of 2025, but they favor it more now than I have seen since the market top of late 2021 and early 2022, which could be another sign that the end is near, and insiders know exactly what Powell has been too afraid or at least too stubborn to admit. And that is that the United States is in a recession and probably has been in a recession since early 2024. And on top of the threat of a downturn in the market driven by lack of liquidity that I just covered, Powell has to also be worried that President Trump's nominee to become the new chief economist at the Department of Labor, E.J. Antoni, will expose his ignorance on this topic, the topic of the real weakness in the U.S. economy and the U.S. jobs market. And maybe it's another reason why Powell has shifted his tone this past Friday, because he knows he won't be able to hide behind fake jobs data much longer, and the nickname of too late might actually evolve into the nickname of too blind, in that he was too blind to see the train wreck that the U.S. economy had already been in. So as things stand today, the market gives a 75% chance of seeing the Fed lower interest rates in September. And I think this is going to be what we see. But as many of my viewers know, it doesn't necessarily translate into lower real interest rates. Because as we've seen, since the Federal Reserve started lowering rates back in September of 2024, long-term interest rates have risen. And the reason is because people aren't buying the lies anymore. Not after witnessing a 50% decline in the value of the dollars they had stashed away in a bank account somewhere between the years of 2020 and 2023. They're not going to lend money out for long periods of time at low interest rates anymore, just because the United States government says, trust us. And this is key for gold and silver, because if this repeats, if the Fed cuts rates and we see those long-term interest rates go up once again, and I think they will, it tells us that trust in the dollar is gone. And although it may end up triggering a crack-up boom as people exit the dollar in droves, and Mario over at the Manico64 channel has talked about this a lot recently, so check him out if you're not watching his channel, I still think it means the stealth bear market in the S&P 500 that we've seen so far in 2025 will continue, as the S&P 500 will struggle to add enough value to the index to offset losses in the US dollar, which is precisely what we've seen since the February market highs to today, where the S&P 500, despite making new highs when counted in US dollars, is down more than 6% when measured in euros and in Swiss francs. And the real boom, not the fake boom that we're seeing in the S&P 500 right now, the real boom will continue in hard physical assets and things that have been booming, like gold, like silver, like raw land. And I even expect to see a turnaround in developed real estate, which has corrected significantly versus the 2022 highs when priced in gold and silver. But as lower rates and bank deregulation kind of make their way through the market, it will make the monthly payments just barely affordable for people to tie themselves down with a 30-year mortgage again, like we saw in 2021 and 2022, once again boosting developed real estate prices. And as I stated back on May 4th of this year, right here on the YouTube channel, after a period of summer consolidation, the first sign of the next wave up for hard assets will be led by gold and silver, and I think we can expect this next upward move to start in September, probably near the end of the month, and strengthen moving into the last 3 months of 2025. And unlike last year, where we saw a big correction in November and some weakness in December, I don't think we're going to see that play out this time around. Despite some possible headwinds for metals, if stocks crash, I still expect them to remain resilient, and it's where I'm still positioning myself today. Now, just before we get into my latest outlook on platinum, please remember that if you want to diversify your hard asset portfolio into land before we see more asset price inflation, visit channel partner landofland.com. They still have this beautiful property in Florida's Indian Lakes Estates available to my viewers at only $24,995. It is located near a golf course, and with taxes under $16 a month, I think this is a great piece of land with plenty of potential. And if you want to see what else they have, check out landofland.com or call them at the number on the screen. And remember to use code BALDGUY to get $300 off your purchase if you want to get something that can't be printed by the Federal Reserve before the Federal Reserve starts printing. Now, jumping into our viewer question for this week, and it's a follow-up on something I last talked about in March, but also briefly covered in a conversation with Rick Rule back in April, and that is platinum. And it was a viewer who goes by Lehigh Silver 1191 that asked me for an update on my outlook, as well as asked me to verify a rumor that there is a new military technology consuming lots of platinum that might cause the price of platinum to rise. So to start, in the past, I have been critical of platinum as a store of wealth and an investment, saying that its outlook is questionable at best because most of its use has revolved around catalytic converters in diesel cars, and that a falling share of diesel use around the world has resulted in stagnating prices despite some pressures on supply. That said, I also warned you all back in that March video that platinum was making extremely bullish chart patterns and that economic stimulus in China was usually a precursor to seeing a big move up in platinum, and that by connecting those two dots together, we could expect to see higher platinum prices. And that's why I told people who were watching the video then, platinum owners, to hold on and wait for a breakout before selling. And I gave a range between $1,400 and $1,600 per ounce as a target where I said people should be selling their platinum to buy gold. And we've hit that range perfectly since that video, despite a recent pullback bringing us back below $1,400 per ounce on platinum. But what is my message for platinum owners and people looking to buy some platinum today? Well, coming back to Lehigh Silver's question, it's true that new military technologies are using more platinum, specifically platinum-based hydrogen fuel cells, which I've known about for a while, but have viewed as niche until recently, when I saw them being successfully used on military drones. And I'll be the first to admit that this was not a part of my March analysis of platinum. And this story here is from April 29th, 2025, and it really forced me to reconsider my earlier judgment on this technology and just how much it could impact the small platinum market. And the conclusion I've come to, considering multiple factors, including the World Platinum Investment Council's outlook on platinum and palladium usage, is that shortages in platinum supply over the next 5 years cannot be fully resolved by recycling platinum substitutes and slightly higher prices as I had originally thought they could be. Because palladium, which is set to go into a surplus next year, and the next 3 years after that, by the way, is not a suitable substitute to platinum in these hydrogen fuel cells. And let that be a warning, by the way, to anyone who is trying to make money on palladium. Now, swinging over to the outlook for platinum price moving forward, other than the resistance it is facing around the $1,400 per ounce level, there are two other levels you need to be aware of, and they are the all-time annual closing high of $1,708 per ounce achieved in 2010, and the all-time high of $2,302 per ounce achieved in 2008 that was caused by major supply issues due to mining disruptions in South Africa. Those two numbers are going to act as realistic price targets for people speculating in platinum moving forward. Now, if we compare the gains needed to get platinum to those levels to the prices we would see for gold and silver if they experienced the same gains in percentage terms, it tells me that although I have to admit that recent developments and use cases for platinum make a compelling speculative case for the metal, I think you have a better chance of seeing those gains play out in a shorter period of time on silver than you do on platinum, considering the industrial and investment demand factors that are influencing silver price right now. And when you add liquidity to the equation, meaning being able to sell a large amount of it quickly and at a reasonable price, I still favor silver and gold over platinum, even though I am admittedly not as bearish as I may have been in the past on it. So, despite my warmer outlook for platinum moving forward, I still think trading platinum for gold is the safest bet for those of you trying to build a long term financial safety net. And the real reason I say that is because most of this new demand for platinum is from the industrial side. And where there may be alternatives to platinum, in this industrial process at some point in the future, there is absolutely no alternative to gold as a liquid store of value, as a hedge to financial chaos, and as real money. So if you must own it, if you must own platinum, all I can say in this video is be reasonable with how much of it you decide to own. So with that said, that's it for this video. Thank you all for making it to the very end. Please remember to leave a like below if you enjoyed this content. Make some noise for the algorithm. Let other people know they should be watching this video too, which includes please sharing this with your loved ones, which helps, of course, my channel grow. And as I say at the end of all of my videos, please remember to take care of yourselves and take care of each other. See you in the next video. Goodbye.